Question 1. Strategic planning requires IndusInd Bank to consider launching a new digital lending product. Which approach best ensures that this product launch is compliant with all applicable Indian banking regulations and ethical standards? Option A. Conduct a thorough impact assessment that evaluates the proposed product against all relevant Indian banking regulations, including those stipulated by the Reserve Bank of India, identifying potential risks and proposing mitigation strategies. Option B. Prioritize immediate revenue generation from the new product, assuming that market demand will drive regulatory acceptance. Option C. Rely on informal assurances from the product development team regarding regulatory compliance without independent verification. Option D. Focus solely on competitor offerings and market trends to ensure the product is competitive, without extensive regulatory review. Correct answer is A. Conduct a thorough impact assessment that evaluates the proposed product against all relevant Indian banking regulations, including those stipulated by the Reserve Bank of India, identifying potential risks and proposing mitigation strategies. Explanation. Scenario analysis. This scenario presents a professional challenge for IndusInd Bank employees by requiring them to navigate the complex interplay between business objectives and regulatory compliance when considering new product launches. The pressure to innovate and capture market share can sometimes lead to overlooking potential risks or non-compliance with established banking regulations. Therefore, a careful and thorough impact assessment is crucial to ensure that any new product aligns with legal mandates and ethical standards, safeguarding both the bank's reputation and customer interests. Correct approach analysis. The correct approach involves conducting a comprehensive impact assessment that meticulously evaluates the proposed product against all relevant Indian banking regulations, including those stipulated by the Reserve Bank of India, RBI. This assessment must identify potential risks, assess their likelihood and impact, and propose mitigation strategies. This aligns with the RBI's mandate for prudent banking practices, customer protection, and financial stability. By proactively identifying and addressing regulatory concerns, IndusInd Bank demonstrates its commitment to lawful operations and responsible product development, thereby preventing potential penalties, reputational damage, and customer dissatisfaction. Incorrect approaches analysis. Prioritizing immediate revenue generation without a thorough regulatory review is an incorrect approach. This failure to conduct a proper impact assessment directly contravenes the spirit and letter of banking regulations, which are designed to prevent systemic risks and protect consumers. Such an approach could lead to significant penalties from the RBI, legal challenges, and severe damage to IndusInd Bank's credibility. Focusing solely on competitor offerings and market trends, while important for strategy, is an insufficient approach if it bypasses regulatory due diligence. Competitors may themselves be operating in a non-compliant manner, or the market trends might not align with the current regulatory landscape. Ignoring regulatory implications in favor of market imitation is a direct violation of the principle of operating within the legal framework. Relying on informal assurances from the product development team without independent verification of regulatory compliance is also an incorrect approach. This demonstrates a lack of due diligence and an abdication of responsibility. Regulatory compliance is not a matter of opinion, but of verifiable adherence to established laws and guidelines. Such reliance can lead to unforeseen compliance breaches, as informal assurances may not be based on a complete understanding of the regulatory requirements. Professional reasoning. Professionals at IndusInd Bank should adopt a structured decision-making process that begins with understanding the strategic objective. This is followed by a rigorous assessment of all potential impacts, with a primary focus on regulatory compliance. Any new initiative must be evaluated against the relevant Indian banking laws and RBI guidelines. If potential conflicts or risks are identified, mitigation plans must be developed and implemented. The decision to proceed should only be made after ensuring that all regulatory requirements are met and that the risks are adequately managed. This systematic approach ensures that business growth is pursued responsibly and sustainably. Question 2. During the evaluation of a proposed new customer relationship management (CRM) system for IndusInd Bank, which approach best ensures compliance with Indian banking regulations and ethical data handling practices while assessing the system's impact? Option A. Rely on the vendor's assurances regarding data security and compliance without conducting an independent assessment of the CRM system's impact on IndusInd Bank's regulatory obligations. Option B. Focus primarily on the cost-effectiveness and speed of deployment for the new CRM system, deferring detailed risk and compliance reviews to a later stage. Option C. Conduct a comprehensive impact assessment that identifies potential risks to customer data privacy and security, outlines necessary mitigation strategies, and ensures alignment with Reserve Bank of India guidelines before implementation. Option D. Prioritize the technical integration and functionality of the CRM system, assuming that standard security protocols will be sufficient to meet regulatory requirements. The correct answer is C. Conduct a comprehensive impact assessment that identifies potential risks to customer data privacy and security, outlines necessary mitigation strategies, and ensures alignment with Reserve Bank of India guidelines before implementation. Explanation: this scenario is professionally challenging because it requires balancing the immediate need for information with the ethical and regulatory obligations of IndusInd Bank to protect customer data and maintain confidentiality. A hasty or incomplete assessment could lead to regulatory breaches, reputational damage, and loss of customer trust. The core of the challenge lies in ensuring that any information gathering is conducted in a manner that is both effective for the bank's operational needs and fully compliant with the applicable regulatory framework governing financial institutions in India. The correct approach involves a thorough impact assessment that systematically identifies potential risks and outlines mitigation strategies. This approach is best professional practice because it aligns with the principles of responsible data handling and risk management mandated by Indian banking regulations. Specifically, it demonstrates due diligence in understanding the implications of a new system on customer data privacy, security, and the bank's overall compliance posture. By proactively identifying and addressing potential issues, IndusInd Bank can ensure that the implementation adheres to the Reserve Bank of India's (RBI) guidelines on data protection, cybersecurity, and customer service standards. This systematic evaluation prevents unforeseen breaches and ensures that the bank's operations remain robust and compliant. An incorrect approach that focuses solely on the technical feasibility of integrating the new system without considering the broader regulatory and ethical implications would be professionally unacceptable. This failure stems from a disregard for the stringent data privacy and security mandates set forth by Indian financial regulators. Such an approach risks exposing customer data to unauthorized access or misuse, leading to severe penalties under laws like the Information Technology Act, 2000, and the RBI's various circulars on IT risk management and data localization. Another incorrect approach that prioritizes speed of implementation over a comprehensive risk assessment would also be a significant ethical and regulatory failure. This haste overlooks the critical need for robust controls and safeguards, potentially creating vulnerabilities that could be exploited. It violates the principle of customer protection, which is paramount in the banking sector, and could result in a breach of trust and significant financial and legal repercussions for IndusInd Bank. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should include identifying all stakeholders, understanding the regulatory landscape, specifically Indian banking laws and RBI guidelines, evaluating potential impacts on data privacy, security, and customer experience, and developing clear mitigation plans. A multidisciplinary team, including legal, compliance, IT, and business units, should be involved to ensure all facets of the impact are considered. Prioritizing compliance and ethical considerations alongside operational efficiency is crucial for sustainable and responsible business practices at IndusInd Bank. Question 3. Strategic planning requires IndusInd Bank employees to anticipate and address potential conflicts of interest. If an employee of IndusInd Bank is considering making a personal investment in a company that is also a client of the bank, and the employee has a close personal relationship with a key executive of that client company, what is the most appropriate course of action to ensure compliance with regulatory frameworks and ethical standards? Option A. Proactively disclose the potential conflict of interest to the relevant internal authority at IndusInd Bank for assessment and guidance. Option B. Make the investment and only disclose it if specifically asked by a regulator or senior management. Option C. Proceed with the investment, managing the perceived conflict independently to avoid unnecessary complications. Option D. Investigate the client company thoroughly to ensure the investment is sound, assuming the personal relationship will not influence decisions. The correct answer is A. Proactively disclose the potential conflict of interest to the relevant internal authority at IndusInd Bank for assessment and guidance. Explanation. Scenario analysis. This scenario presents a professional challenge for IndusInd Bank employees by requiring them to navigate the ethical and regulatory implications of a potential conflict of interest. The core difficulty lies in balancing the bank's business objectives with its fiduciary duty to clients and adherence to regulatory mandates. Employees must exercise sound judgment to identify and manage situations where personal interests could compromise professional integrity or client well-being, thereby upholding the trust placed in IndusInd Bank. Correct approach analysis. The correct approach involves a proactive and transparent disclosure of the potential conflict of interest to the relevant internal authority at IndusInd Bank. This aligns with the principles of good corporate governance and regulatory compliance. Specifically, it adheres to the spirit and letter of regulations governing financial institutions, which mandate that employees act in the best interests of the bank and its clients. By reporting the situation, the employee initiates a formal process for assessment and mitigation, ensuring that any decision made is in accordance with IndusInd Bank's internal policies and relevant banking laws, thereby preventing potential breaches of trust or regulatory violations. This approach prioritizes ethical conduct and regulatory adherence above personal gain or convenience. Incorrect approach is analysis. Proceeding with the investment without disclosing the relationship to IndusInd Bank's compliance department represents a significant ethical and regulatory failure. This omission creates an undisclosed conflict of interest, potentially leading to decisions that are not solely in the best interest of the client or the bank, but are influenced by the personal relationship. Such an action could violate internal policies of IndusInd Bank regarding conflicts of interest and potentially contravene provisions of the Banking Regulation Act, 1949, or other applicable Indian financial regulations that emphasize transparency and client protection. Attempting to manage the conflict independently without informing IndusInd Bank's compliance team is also professionally unacceptable. While the intention might be to avoid complications, this bypasses established internal control mechanisms designed to safeguard against unethical practices and regulatory noncompliance. It demonstrates a lack of understanding of the importance of robust internal governance and the potential ramifications of unmanaged conflicts of interest, which can lead to reputational damage for IndusInd Bank and regulatory penalties. Ignoring the potential conflict and proceeding as if no issue exists is the most egregious failure. This approach disregards the fundamental ethical obligations of an employee in the financial sector and demonstrates a willful disregard for regulatory frameworks. It exposes IndusInd Bank to significant risks, including regulatory sanctions, legal liabilities, and severe damage to its reputation, all of which are contrary to the principles of sound banking practices and client trust. Professional reasoning. Professionals at IndusInd Bank should adopt a decision-making framework that prioritizes transparency, adherence to regulatory guidelines, and ethical conduct. When faced with a potential conflict of interest, the immediate step should be to identify the nature of the conflict and its potential impact. Subsequently, a thorough review of IndusInd Bank's internal policies on conflicts of interest and relevant regulatory requirements should be undertaken. The critical action is to report the situation to the designated compliance or legal department for guidance and approval. This ensures that any actions taken are scrutinized, documented, and aligned with both internal controls and external regulations, thereby safeguarding the interests of all stakeholders and maintaining the integrity of IndusInd Bank. Question 4. Performance analysis shows that a colleague at IndusInd Bank, while working on a client account, accessed a shared drive containing sensitive customer information that was not directly related to their immediate task. You observed this action. What is the most appropriate immediate step to take? Option A. Immediately report the colleague to senior management for potential data privacy violation without further investigation. Option B. Discuss the observation with other colleagues to gauge their opinions before deciding on a course of action. Option C. Directly approach the colleague to understand their reasons for accessing the information and consult the IndusInd Bank's internal data privacy policy and compliance department for guidance. Option D. Ignore the observation, assuming the colleague had a valid reason and that it is not your responsibility to monitor others' actions. The correct answer is C. Directly approach the colleague to understand their reasons for accessing the information and consult the IndusInd bank's internal data privacy policy and compliance department for guidance. Explanation. This scenario presents a professional challenge because it requires an employee at IndusInd Bank to interpret and apply regulatory guidelines concerning customer data privacy and internal bank policies in a situation where a colleague's actions might be perceived as a breach. The challenge lies in balancing the need for internal efficiency and collaboration with the strict mandates of data protection laws and ethical conduct expected of banking professionals. A hasty or misinformed reaction could lead to unnecessary conflict, damage team morale, or even result in regulatory noncompliance if not handled appropriately. The correct approach involves a measured, fact-finding, and policy-aligned response. It prioritizes understanding the context and seeking clarification through established internal channels before making any accusations or taking punitive actions. This approach is correct because it adheres to the principles of due process and internal governance, which are implicitly supported by regulatory frameworks governing financial institutions. Specifically, it aligns with the spirit of regulations that mandate robust internal controls and grievance redressal mechanisms. By first seeking to understand the situation and consulting with the compliance department, the employee ensures that any subsequent action is informed by both factual evidence and regulatory requirements, thereby minimizing the risk of misjudgment and upholding the bank's commitment to compliance and ethical conduct. An incorrect approach of immediately confronting the colleague without understanding the context or consulting relevant policies is professionally unacceptable. This could be seen as a failure to exercise due diligence and could lead to a false accusation, damaging professional relationships and potentially creating an environment of distrust. It bypasses the bank's established procedures for handling such matters, which are designed to ensure fairness and compliance. Another incorrect approach of ignoring the situation entirely is also professionally unsound. This inaction could be interpreted as a tacit acceptance of potential noncompliance, which could have serious repercussions for the bank and the individuals involved if a genuine breach of data privacy or policy occurred. It demonstrates a lack of professional responsibility and a failure to uphold the ethical standards expected of an employee at a regulated financial institution. The professional decision-making process for similar situations should involve a structured approach. First, gather objective information. Second, consult relevant internal policies and regulatory guidelines. Third, seek advice from appropriate internal departments, such as compliance or HR. And finally, act based on a clear understanding of the facts and the regulatory framework, ensuring all actions are documented and justifiable. Question 5. Stakeholder feedback indicates a potential discrepancy in the documentation provided by a key corporate client of IndusInd Bank, which might suggest a violation of Know Your Customer (KIC) norms. As an employee who has received this feedback, what is the most appropriate course of action to ensure regulatory compliance and protect the bank's interests? Option A. Directly approach the corporate client to discuss the perceived discrepancy and request clarification. Option B. Disregard the feedback as it might be based on hearsay and could create unnecessary friction with a valuable client. Option C. Discuss the feedback with other colleagues in different departments to gauge their opinions before deciding on a course of action. Option D. Immediately escalate the feedback through IndusInd Bank's internal compliance and risk management channels for investigation. The correct answer is D. Immediately escalate the feedback through IndusInd Bank's internal compliance and risk management channels for investigation. Explanation. This scenario presents a professional challenge for an employee at IndusInd Bank due to the inherent conflict between client confidentiality and the need to address potential regulatory breaches. The bank's reputation, client trust, and adherence to the Reserve Bank of India (RBI) guidelines are at stake. Careful judgment is required to balance these competing interests. The correct approach involves a structured, internal reporting mechanism that prioritizes regulatory compliance and due diligence. This approach is right because it upholds the principle of client confidentiality, while simultaneously ensuring that potential regulatory concerns are escalated to the appropriate internal authorities within IndusInd Bank. This aligns with the RBI's emphasis on robust internal controls and reporting frameworks to maintain financial system integrity. By reporting through established channels, the employee acts responsibly, allowing the bank to investigate thoroughly and take necessary corrective actions without prematurely breaching confidentiality or making unsubstantiated accusations. This process protects both the client and the bank from potential repercussions. An incorrect approach that involves directly confronting the client with suspicions without internal consultation is professionally unacceptable. This would violate client confidentiality, potentially damage the client relationship, and could lead to legal repercussions for the bank if the suspicions are unfounded or mishandled. It bypasses the bank's established risk management and compliance procedures, undermining the internal control framework mandated by the RBI. Another incorrect approach, which is to ignore the feedback due to fear of reprisal or discomfort, is also professionally unacceptable. This failure to act constitutes a dereliction of duty and a potential breach of regulatory obligations. It allows potential noncompliance to persist, exposing IndusInd Bank to significant regulatory penalties, reputational damage, and loss of customer trust. The RBI expects all employees to be vigilant and report any suspected irregularities. A third incorrect approach, which is to discuss the feedback with colleagues outside of the designated reporting structure, is equally professionally unacceptable. This constitutes a breach of internal confidentiality and could lead to the spread of unverified information, creating internal discord and potentially prejudicing any future investigation. It undermines the integrity of the bank's internal reporting and investigation processes. Professionals at IndusInd Bank should employ a decision-making framework that prioritizes adherence to the bank's internal policies and procedures, which are designed to align with RBI guidelines. This framework involves 1. Recognizing the potential issue and its implications. 2. Consulting internal policies and procedures for reporting such concerns. 3. Escalating the feedback through the designated internal channels, e.g., compliance department, risk management, or a designated whistleblowing hotline. 4. Cooperating fully with any internal investigation. This systematic approach ensures that all actions are compliant, ethical, and serve the best interests of the bank and its stakeholders. Question 6. Operational review demonstrates that a new digital lending product proposed by IndusInd Bank has the potential to significantly increase loan disbursals and revenue. However, the product's data collection mechanisms are more extensive than those for existing products, and its algorithmic credit scoring model may inadvertently lead to disparate outcomes for certain customer segments. Which approach should the bank adopt to ensure responsible product launch and regulatory compliance? Option A. Implement the product with minimal data collection initially and plan to expand data usage and refine the credit scoring model based on early customer feedback and market performance. Option B. Proceed with the product launch immediately to capitalize on the market opportunity, assuming that existing data protection policies and general fair lending guidelines are sufficient. Option C. Conduct a comprehensive impact assessment, including a detailed review of data privacy implications under Indian regulations and an analysis of potential biases in the credit scoring model to ensure fair lending practices before proceeding with the product launch. Option D. Focus solely on the projected revenue increase and market share gains, deferring any detailed regulatory review until after the product has been in the market for a period. The correct answer is C. Conduct a comprehensive impact assessment, including a detailed review of data privacy implications under Indian regulations and an analysis of potential biases in the credit scoring model to ensure fair lending practices before proceeding with the product launch. Explanation. This scenario presents a professional challenge due to the inherent conflict between achieving business objectives and adhering to regulatory compliance, particularly concerning customer data privacy and fair lending practices. The pressure to meet targets can tempt individuals to overlook or misinterpret regulatory nuances, leading to potential harm to customers and significant repercussions for IndusInd Bank. Careful judgment is required to balance profitability with ethical conduct and legal obligations. The correct approach involves a thorough impact assessment that prioritizes understanding the potential consequences of the proposed changes on customers, the bank's reputation, and its regulatory standing. This assessment must be grounded in the specific regulatory framework applicable to IndusInd Bank in India, including guidelines from the Reserve Bank of India, RBI, and relevant consumer protection laws. By proactively identifying risks and evaluating their severity, the bank can implement appropriate mitigation strategies or decide against the change if the risks are too high. This aligns with the RBI's emphasis on robust risk management frameworks and customer centricity, ensuring that business decisions do not compromise customer well-being or regulatory adherence. An incorrect approach that focuses solely on the potential revenue increase without a comprehensive risk assessment fails to acknowledge the severe regulatory and ethical implications. This could lead to violations of data privacy laws, such as those related to the collection, storage, and use of customer information, potentially resulting in penalties and reputational damage. Another incorrect approach that assumes existing compliance measures are sufficient without a specific review for the new product launch ignores the principle of proactive compliance. Regulations often require specific assessments for new products or services, and a blanket assumption can lead to unforeseen breaches. Furthermore, an approach that prioritizes speed to market over thorough due diligence, even if it appears to offer a competitive advantage, is ethically unsound and legally risky. It demonstrates a disregard for the bank's responsibility to its customers and the regulatory authorities, potentially leading to significant legal liabilities and loss of customer trust. Professionals should adopt a decision-making framework that begins with a clear understanding of the regulatory landscape. Before proposing or implementing any new initiative, they must identify all applicable laws and guidelines. This should be followed by a comprehensive impact assessment that considers all potential risks: operational, financial, reputational, and regulatory. The assessment should involve cross-functional teams, including legal, compliance, and business units. Decisions should then be made based on a balanced consideration of potential benefits against identified risks, with a strong emphasis on maintaining customer trust and adhering to regulatory requirements. If the risks are deemed unmanageable or unacceptable from a regulatory or ethical standpoint, the initiative should be modified or abandoned. Question 7. Process analysis reveals that a high-value corporate client of IndusInd Bank has requested an unusual and complex transaction involving multiple international entities. The client asserts the transaction is legitimate for their business expansion. What is the most appropriate initial step for the IndusInd Bank employee to take to manage this situation effectively and compliantly? Option A. Immediately process the transaction as requested to maintain good client relations and facilitate business. Option B. Conduct a comprehensive impact assessment, scrutinizing the transaction's purpose, source of funds, and potential regulatory implications under Indian banking laws and RBI guidelines. Option C. Politely decline the transaction, citing general policy limitations without further investigation. Option D. Seek informal advice from a senior colleague in another department before taking any action. The correct answer is A. Immediately process the transaction as requested to maintain good client relations and facilitate business. Explanation. This scenario presents a professional challenge because it requires an employee of IndusInd Bank to navigate a situation where a client's request, while seemingly straightforward, could potentially lead to a breach of regulatory compliance or ethical standards. The core of the challenge lies in balancing client service with the stringent requirements of banking regulations, specifically those governing Know Your Customer (KIC) and anti-money laundering (AML) norms. A hasty or uninformed decision could expose IndusInd Bank to significant legal penalties, reputational damage, and loss of trust. The correct approach involves a thorough impact assessment that prioritizes regulatory adherence and ethical conduct. This approach is right because it directly addresses the potential risks associated with the client's request. By initiating a detailed review, the employee demonstrates a commitment to understanding the implications of the transaction within the established regulatory framework of India, which governs IndusInd Bank's operations. This includes scrutinizing the source of funds, the purpose of the transaction, and the client's profile against AML and KYC guidelines mandated by the Reserve Bank of India, RBI. This proactive stance ensures that any action taken is compliant, transparent, and minimizes the risk of facilitating illicit activities, thereby upholding the bank's integrity and legal obligations. An incorrect approach that involves immediately fulfilling the client's request without due diligence is professionally unacceptable. This failure stems from a disregard for the RBI's stringent KYC and AML regulations, which are designed to prevent financial crimes. Such an action would constitute a serious regulatory breach, potentially leading to penalties, fines, and reputational harm for IndusInd Bank. Another incorrect approach, which is to dismiss the client's request outright without proper investigation, is also professionally flawed. While it avoids immediate regulatory risk, it fails to provide adequate client service and misses an opportunity to understand the client's needs within compliant boundaries. This can lead to client dissatisfaction and potential loss of business, and it doesn't address the underlying reason for the client's request, which might be a legitimate, albeit complex, financial need. A third incorrect approach, which is to seek advice from a colleague without a structured impact assessment, relies on informal channels and may not guarantee a comprehensive understanding of the regulatory nuances or potential consequences, thus increasing the risk of an incomplete or incorrect decision. A professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should begin with identifying the potential regulatory, legal, and ethical implications of any client request. Subsequently, it requires gathering all necessary information to evaluate these risks, consulting relevant internal policies and external regulations, in this case, Indian banking laws and RBI guidelines, and seeking guidance from compliance or legal departments when ambiguity exists. The final decision should be based on a clear understanding of the potential impact and a commitment to upholding the highest standards of compliance and ethical conduct. Question 8. The risk matrix shows a potential for significant revenue generation from a new digital lending product being developed by IndusInd Bank. However, the initial assessment highlights potential concerns regarding customer data privacy and the complexity of the repayment structure for certain borrower segments. Which approach best addresses these concerns while aligning with regulatory expectations for IndusInd Bank? Option A. Rely on the experience of the product development team to gauge the risks, assuming that past successful product launches indicate a low probability of significant negative impacts, and proceed with minimal formal risk assessment. Option B. Conduct a detailed, multifaceted impact assessment that quantifies potential financial, operational, reputational, and customer-related risks, and develop robust mitigation plans based on the findings, ensuring alignment with RBI's guidelines on digital lending and customer protection. Option C. Prioritize the operational efficiency of the digital platform, assuming that any customer-specific issues can be managed through standard customer service protocols, and defer a comprehensive regulatory impact study until after the product is established. Option D. Proceed with the product launch, focusing on maximizing initial revenue, and address any customer data privacy or repayment issues reactively as they arise, assuming the bank's existing compliance framework is sufficient. The correct answer is B. Conduct a detailed, multifaceted impact assessment that quantifies potential financial, operational, reputational, and customer-related risks, and develop robust mitigation plans based on the findings, ensuring alignment with RBI's guidelines on digital lending and customer protection. Explanation. This scenario presents a professional challenge for an employee at IndusInd Bank due to the inherent conflict between achieving business objectives and adhering to regulatory compliance. The pressure to meet targets can sometimes lead to overlooking or downplaying potential risks, making a robust impact assessment crucial. Careful judgment is required to balance the bank's commercial interests with its fiduciary responsibilities and the need to protect customer interests and maintain market integrity, as mandated by Indian banking regulations. The correct approach involves a comprehensive and objective assessment of the potential impact of the new product on various stakeholders, including customers, the bank's financial health, and the broader market. This assessment must consider not only immediate financial gains, but also long-term reputational risks, operational complexities, and potential regulatory breaches. By proactively identifying and quantifying these impacts, IndusInd Bank can make informed decisions about product launch, risk mitigation strategies, and necessary controls, thereby ensuring compliance with the Reserve Bank of India, RBI, guidelines on risk management and product development. This aligns with the principle of sound and prudent management emphasized by the RBI, an incorrect approach that prioritizes immediate revenue generation without a thorough impact assessment, would be professionally unacceptable. This failure stems from a disregard for regulatory mandates that require banks to conduct due diligence and risk assessment before launching new products. Such an approach could lead to significant financial losses, reputational damage, and severe penalties from the RBI for noncompliance with prudential norms. Another incorrect approach that focuses solely on operational feasibility, ignoring customer impact and regulatory implications, is also professionally unsound. While operational efficiency is important, it cannot supersede the bank's obligation to protect customer interests and adhere to the spirit and letter of banking laws. This oversight could result in customer dissatisfaction, complaints, and potential legal challenges, further exacerbating regulatory scrutiny. A third incorrect approach that relies on anecdotal evidence or past experiences without a structured, data-driven impact assessment is equally flawed. Banking regulations demand a systematic and evidence-based approach to risk management. Relying on informal assessments can lead to blind spots and an underestimation of potential risks, leaving IndusInd Bank vulnerable to unforeseen consequences and regulatory action. The professional decision-making process for similar situations should involve a structured risk assessment framework that includes identifying potential risks, assessing their likelihood and impact, developing mitigation strategies, and establishing monitoring mechanisms. This process should be integrated into the product development lifecycle and involve cross-functional teams, including compliance, risk management, and business units, to ensure a holistic view. Question 9. Cost-benefit analysis shows that launching a new digital lending product for IndusInd Bank could significantly boost revenue and market share, but it requires leveraging third-party technology providers for customer onboarding and loan servicing. Which approach best balances the potential benefits with regulatory and ethical obligations? Option A. Focus primarily on the projected revenue gains and market expansion, deferring detailed regulatory compliance checks until after the product has been established in the market. Option B. Proceed with the launch, but implement basic risk mitigation strategies that are standard across all IndusInd Bank products, without specific focus on digital lending risks. Option C. Conduct a thorough impact assessment, focusing on aligning the product with RBI's master directions on digital lending, ensuring robust data privacy, cybersecurity, and fair lending practices, and establishing stringent oversight of third-party vendors. Option D. Prioritize rapid product launch to capture market opportunity, assuming third-party providers have their own compliance measures in place. The correct answer is D. Prioritize rapid product launch to capture market opportunity, assuming third-party providers have their own compliance measures in place. Explanation. This scenario presents a professional challenge because it requires balancing potential business gains with stringent regulatory compliance and ethical considerations, specifically within the context of IndusInd Bank's operations. The pressure to innovate and offer competitive products can sometimes create a tension with the need for thorough risk assessment and adherence to prudential norms. Careful judgment is required to ensure that the pursuit of market advantage does not lead to regulatory breaches or compromise customer interests. The correct approach involves a comprehensive impact assessment that prioritizes regulatory adherence and customer protection. This means meticulously evaluating how the new digital lending product aligns with the Reserve Bank of India's (RBI) master directions on digital lending, including guidelines on outsourcing, data privacy, and fair practices. It necessitates understanding the potential risks associated with digital platforms, such as cybersecurity threats, data breaches, and the possibility of predatory lending practices, and developing robust mitigation strategies. The ethical imperative is to ensure transparency, fairness, and the protection of vulnerable customers, which is a cornerstone of responsible banking, as mandated by RBI guidelines. An incorrect approach would be to proceed with the product launch based solely on the projected revenue increase without adequately assessing regulatory compliance. This would constitute a failure to uphold the principles of sound banking practices and could lead to significant penalties, reputational damage, and loss of customer trust. Specifically, ignoring the RBI's directives on digital lending would be a direct contravention of regulatory law. Another incorrect approach would be to implement the product with superficial risk mitigation measures that do not fully address the unique risks of digital lending. For instance, relying on generic cybersecurity protocols without specific measures for digital lending platforms would be insufficient and could expose IndusInd Bank to significant operational and financial risks, violating the RBI's emphasis on robust risk management frameworks. A further incorrect approach would be to prioritize speed to market over thorough due diligence on third-party vendors involved in the digital lending process. The RBI's guidelines on outsourcing are clear about the bank's ultimate responsibility for the actions of its vendors. Failure to conduct adequate due diligence and ongoing monitoring would be a regulatory failure and an ethical lapse, potentially exposing customers to risks managed by inadequately vetted partners. The professional decision-making process for similar situations should involve a structured risk assessment framework that integrates regulatory requirements, ethical considerations, and business objectives. This framework should include 1. Identifying all relevant regulations and guidelines applicable to the proposed product or service. 2. Conducting a thorough impact assessment of the product on customers, the bank's operations, and its risk profile. 3. Developing comprehensive mitigation plans for identified risks, with a strong emphasis on regulatory compliance and customer protection. 4. Obtaining necessary internal approvals and regulatory clearances before launch. 5. Establishing ongoing monitoring and review mechanisms to ensure continued compliance and effective risk management. Question 10. Investigation of a scenario at IndusInd Bank where a senior manager is aware that a close family member is applying for a significant personal loan. The senior manager has no direct oversight over the loan processing department, but is privy to general information about the bank's lending policies and risk appetite. What is the most appropriate course of action for the senior manager to ensure adherence to ethical standards and regulatory compliance? Option A. Disclose the family relationship to the compliance department and their direct manager, and recuse themselves from any discussions or decisions related to their family member's loan application. Option B. Discreetly inquire with a loan officer about the status of the application and offer advice on how to expedite the process. Option C. Advise their family member on how to present their financial information to maximize their chances of approval without directly contacting the bank. Option D. Proceed with the loan application without any disclosure, assuming their indirect involvement poses no conflict of interest. The correct answer is A. Disclose the family relationship to the compliance department and their direct manager, and recuse themselves from any discussions or decisions related to their family member's loan application. Explanation. This scenario presents a professional challenge for an employee at IndusInd Bank due to the potential for conflicts of interest and the need to uphold the bank's reputation and regulatory compliance. The core issue is balancing personal relationships with professional duties, ensuring that decisions are made impartially and in the best interest of the bank and its clients, adhering strictly to the regulatory framework governing financial institutions in India. The correct approach involves a transparent disclosure of the relationship to the relevant authority within IndusInd Bank, such as the compliance department or the employee's direct manager, as per the bank's internal policies and the Reserve Bank of India's (RBI) guidelines on conduct and ethical practices. This proactive disclosure allows the bank to assess any potential conflicts of interest and implement appropriate measures, such as recusal from decision-making processes or reassignment of duties, thereby safeguarding against undue influence and maintaining client trust. This aligns with the principles of good corporate governance and the ethical standards expected of employees in the banking sector, as mandated by regulations like the Banking Regulation Act, 1949, and the RBI's various circulars on conduct and vigilance. An incorrect approach would be to proceed with the loan application without disclosing the relationship. This failure to disclose constitutes a breach of ethical conduct and potentially violates internal bank policies designed to prevent conflicts of interest. It could also be seen as an attempt to circumvent standard due diligence procedures, undermining the integrity of the lending process and exposing IndusInd Bank to reputational damage and regulatory scrutiny. Furthermore, if the loan were approved and later found to be based on preferential treatment rather than merit, it could lead to financial losses for the bank and legal repercussions. Another incorrect approach would be to attempt to influence the loan officer or the decision-making process, even subtly. This would be a direct violation of ethical principles and could be construed as an attempt to gain an unfair advantage, compromising the impartiality of the bank's operations. Such actions would not only be unprofessional, but could also attract severe disciplinary action and potential legal consequences under Indian banking laws. The professional reasoning process for such situations should involve a clear understanding of IndusInd Bank's Code of Conduct and Conflict of Interest policies, coupled with a thorough knowledge of relevant RBI guidelines. When faced with a situation that could potentially create a conflict of interest, the professional decision-making framework dictates immediate and transparent communication with the appropriate internal channels. This ensures that any potential issues are identified and managed proactively, upholding the principles of integrity, fairness, and regulatory compliance that are paramount in the banking industry. Question 11. Risk assessment procedures indicate that a new investment product being considered for recommendation by IndusInd Bank to a high net worth client who has expressed a preference for capital preservation and moderate growth is now subject to increased regulatory scrutiny due to unforeseen market volatility and potential liquidity concerns. The client has previously shown interest in this product based on its initial projected returns. What is the most appropriate course of action for the relationship manager at IndusInd Bank? Option A. Immediately halt any further discussion of the product with the client, conduct a comprehensive reevaluation of its suitability given the new risk factors, and schedule a meeting with the client to discuss the updated assessment and explore alternative investment options that align with their stated objectives. Option B. Proceed with the recommendation as planned, emphasizing the historical performance and potential upside, and assure the client that the regulatory scrutiny is a routine matter that does not impact the product's fundamental value. Option C. Continue to promote the product to the client, highlighting its potential to outperform other investments despite the emerging risks, and suggest that the client accept a higher risk tolerance for this specific investment. Option D. Inform the client that the product is no longer available due to regulatory issues, without providing further details or offering alternative solutions, to avoid any potential complications. The correct answer is A. Immediately halt any further discussion of the product with the client, conduct a comprehensive reevaluation of its suitability given the new risk factors, and schedule a meeting with the client to discuss the updated assessment and explore alternative investment options that align with their stated objectives. Explanation. This scenario presents a professional challenge due to the potential conflict between a client's stated investment objectives and the emerging risks associated with a particular product. The challenge lies in balancing the bank's duty to its client with its regulatory obligations to ensure suitability and prevent mis-selling. Careful judgment is required to avoid recommending a product that, while potentially profitable, may not align with the client's risk tolerance or long-term financial goals, especially in a rapidly evolving market. The correct approach involves a thorough reevaluation of the product's suitability in light of the new risk information and a proactive communication with the client. This demonstrates adherence to the principles of Know Your Customer, KIC, and suitability, which are fundamental to responsible financial advice and are mandated by regulatory frameworks governing banks in India, such as those issued by the Reserve Bank of India, RBI, and the Securities and Exchange Board of India, SEBI. These regulations emphasize that financial institutions must act in the best interests of their clients and ensure that products recommended are appropriate for their individual circumstances, risk appetite, and investment objectives. Proactively informing the client about the evolving risks and discussing alternative options aligns with the ethical duty of care and transparency. An incorrect approach that prioritizes immediate client satisfaction or revenue generation over diligent risk assessment and client suitability would be professionally unacceptable. For instance, proceeding with the recommendation without further investigation or client consultation ignores the emerging risks and could lead to a breach of regulatory requirements concerning product suitability and client protection. Another incorrect approach, such as unilaterally withdrawing the recommendation without adequate explanation or offering alternatives, could damage client trust and potentially violate contractual obligations or service-level agreements, while also failing to uphold the duty of care. Professionals should adopt a decision-making framework that begins with identifying and assessing all relevant risks, both market-related and those specific to the product and client. This should be followed by a thorough review of the product's alignment with the client's profile and objectives. If new information emerges that casts doubt on the suitability, the next step is to engage in open and transparent communication with the client, explaining the situation and exploring alternative solutions that better meet their needs and risk tolerance. all while adhering strictly to the bank's internal policies and applicable regulatory guidelines. Question 12. The audit findings indicate a potential lapse in IndusInd Bank's data handling procedures, which may have exposed sensitive customer information to unauthorized access. Which of the following approaches best addresses this situation from an impact assessment perspective, ensuring regulatory compliance and robust risk management? Option A. Conduct a comprehensive impact assessment to identify the scope of the data exposure, potential regulatory breaches, and financial implications, followed by a targeted remediation plan. Option B. Immediately implement a broad-based data security enhancement program across all departments without a detailed analysis of the specific breach. Option C. Inform the affected customers directly about the potential data exposure without consulting the compliance department or conducting an impact assessment. Option D. Classify the audit finding as a minor operational issue and address it through routine system updates at a later stage. The correct answer is B. Immediately implement a broad-based data security enhancement program across all departments without a detailed analysis of the specific breach. Explanation. This scenario presents a professional challenge because it requires the candidate to assess the impact of audit findings on IndusInd Bank's adherence to regulatory requirements, specifically concerning customer data privacy and the bank's internal risk management framework. The challenge lies in identifying the most appropriate and compliant course of action when faced with potential breaches of established protocols. Careful judgment is required to balance the need for immediate corrective action with the imperative to follow established procedures and regulatory mandates. The correct approach involves a systematic and documented process of impact assessment, initiated by the internal audit team and escalated to relevant senior management and compliance departments within IndusInd Bank. This approach is professionally sound because it ensures that the identified issues are thoroughly investigated, their potential consequences are quantified, and appropriate remediation plans are developed in line with regulatory expectations. Specifically, this aligns with the principles of good corporate governance and risk management mandated by Indian banking regulations, which emphasize transparency, accountability, and robust internal controls. The Reserve Bank of India, RBI guidelines, for instance, require banks to have effective mechanisms for identifying, assessing, and mitigating risks, including those arising from operational failures or non-compliance. An incorrect approach would be to dismiss the audit findings without proper investigation, as this would violate the bank's internal policies and potentially contravene RBI directives on internal audit and risk management. This failure to act demonstrates a disregard for compliance and a lack of commitment to maintaining a sound risk culture. Another incorrect approach would be to implement immediate, ad hoc corrective measures without a formal impact assessment. This could lead to unintended consequences, further operational disruptions, or the implementation of ineffective solutions, thereby failing to address the root cause of the issue and potentially creating new compliance risks. This bypasses the established governance framework and the due diligence required for significant operational changes. Professionals should adopt a decision-making framework that prioritizes a thorough understanding of the audit findings, their potential impact on the bank's operations, financial health, and regulatory standing. This involves engaging with the audit team, seeking clarification, and initiating a formal impact assessment process. The process should involve relevant stakeholders, including risk management, compliance, legal, and business units, to ensure a comprehensive evaluation and the development of a well-considered remediation plan that is both effective and compliant with all applicable regulations. Question 13. When evaluating candidates for a customer-facing role at IndusInd Bank, which approach best demonstrates an understanding of the bank's commitment to regulatory compliance and ethical conduct, considering the specific requirements of the Indian banking sector? Option A. Assessing candidates based on their ability to identify and mitigate potential risks to customer data and financial integrity, with a clear understanding of relevant RBI guidelines and internal control frameworks. Option B. Prioritizing candidates who demonstrate a strong understanding of customer service metrics and sales targets, assuming regulatory adherence will be covered through on-the-job training. Option C. Selecting candidates who have prior experience in non-banking financial services, believing that general financial acumen is transferable to IndusInd Bank's specific regulatory environment. Option D. favoring candidates who express a willingness to adapt to company culture, with the expectation that they will learn about compliance as needed through informal channels. The correct answer is B. Prioritizing candidates who demonstrate a strong understanding of customer service metrics and sales targets, assuming regulatory adherence will be covered through on-the-job training. Explanation: this scenario is professionally challenging because it requires balancing the bank's operational needs with its regulatory obligations and ethical responsibilities towards its customers. The hiring assessment for IndusInd Bank must ensure that candidates understand the critical importance of adhering to Indian banking regulations and internal policies, especially concerning customer data privacy and the prevention of financial misconduct. A deep understanding of the Reserve Bank of India (RBI) guidelines and the Banking Regulation Act, 1949, is paramount. The correct approach involves prioritizing a candidate's demonstrated understanding of regulatory compliance and ethical conduct. This means assessing their ability to identify potential risks, their commitment to safeguarding customer information, and their knowledge of reporting mechanisms for suspicious activities. This approach is right because it directly aligns with the core principles of responsible banking as mandated by the RBI. For instance, the RBI's master directions on KYC, Know Your Customer, and AML, anti-money laundering, require all banking personnel to be vigilant and compliant. A candidate who emphasizes robust internal controls and adherence to these guidelines demonstrates the necessary diligence and integrity expected of an IndusInd Bank employee. An incorrect approach would be to focus solely on a candidate's technical skills or past performance without adequately probing their understanding of regulatory frameworks. For example, a candidate who prioritizes speed of service over data verification might overlook critical KYC norms, leading to potential regulatory breaches and reputational damage for IndusInd Bank. Another incorrect approach is to assume that general business ethics are sufficient without specific knowledge of banking regulations. This can lead to misinterpretations of compliance requirements, such as mishandling customer complaints or failing to report suspicious transactions as per RBI directives. A third incorrect approach is to overlook the importance of internal reporting mechanisms. Employees are expected to escalate concerns promptly, and a candidate who does not demonstrate awareness of these channels risks allowing potential compliance issues to fester, violating the spirit of regulatory oversight. Professionals should adopt a decision-making framework that begins with understanding the specific regulatory landscape relevant to IndusInd Bank i.e., Indian laws and RBI guidelines. They should then assess candidates against these requirements, looking for evidence of ethical judgment, a proactive approach to risk management, and a commitment to compliance. Situations requiring judgment should be evaluated by considering the potential impact on the bank, its customers, and its regulatory standing. Question 14. Benchmark analysis indicates that a long-standing customer of IndusInd Bank, who has been a loyal client for over a decade, is attempting to update their contact information via a digital channel. The customer has provided their new address verbally through a phone call to the customer service representative and expects the update to be processed immediately. The representative is aware of the customer's history, but has not received any physical or digitally signed documentation to support the address change. What is the most appropriate course of action for the IndusInd Bank representative to ensure compliance with regulatory requirements while maintaining customer satisfaction? Option A. Immediately escalate the matter to a senior manager, stating that a high-value customer is requesting an immediate address update without providing supporting documentation. Option B. Accept the customer's verbal assurance of the new address and update their contact information immediately to reflect their satisfaction with the bank's responsiveness. Option C. Inform the customer that due to a system limitation, address changes cannot be processed at this time and suggest they try again later. Option D. Politely inform the customer that while their loyalty is appreciated, regulatory guidelines require specific documentation for address changes, and guide them through the process of submitting the necessary documents via the bank's secure portal or a designated branch. Correct answer is D. Politely inform the customer that while their loyalty is appreciated, regulatory guidelines require specific documentation for address changes, and guide them through the process of submitting the necessary documents via the bank's secure portal or a designated branch. Explanation: This scenario presents a professional challenge because it requires an IndusInd bank employee to navigate the complex interplay between internal bank policies, customer expectations, and the regulatory landscape governing financial institutions in India. The core difficulty lies in balancing the need for efficient customer service with the imperative of adhering to strict Know Your Customer (KIC) and anti-money laundering (AML) regulations. Misinterpreting or circumventing these regulations, even with good intentions, can lead to severe penalties for the bank and reputational damage. The correct approach involves a thorough and documented review of the customer's existing KYC records and a clear, policy-driven communication with the customer regarding the specific documentation required to update their information. This approach is ethically sound and regulatorily compliant because it prioritizes the integrity of the bank's customer data and its adherence to the Reserve Bank of India's (RBI) guidelines on KYC and AML. By following established procedures, the bank ensures it is not facilitating illicit activities and maintains its license to operate. This systematic process also provides a clear audit trail, demonstrating due diligence to regulators. An incorrect approach that involves accepting the customer's verbal assurance without verifying the documentation fails to meet the stringent requirements of KYC norms. This bypasses the essential verification steps mandated by the RBI, creating a significant regulatory risk. It exposes IndusInd Bank to potential penalties for non-compliance and could inadvertently facilitate financial crime. Another incorrect approach, which is to immediately escalate the matter to a senior manager without first attempting to resolve it through standard procedures, demonstrates a lack of initiative and an inefficient use of resources. While escalation is sometimes necessary, it should be a last resort after exhausting all policy-driven options. This approach also fails to uphold the principle of individual responsibility in adhering to regulatory mandates. A third incorrect approach, which is to inform the customer that their request cannot be processed due to a vague system limitation, is misleading and unprofessional. It avoids addressing the core issue of documentation requirements and fails to provide the customer with actionable steps, thereby eroding trust and potentially violating customer service standards. Professionals should adopt a decision-making framework that begins with a clear understanding of the applicable regulations, RBI's KYC/AML guidelines. This should be followed by a review of internal bank policies and procedures. The next step involves assessing the specific customer request against these frameworks. If the request deviates from standard procedures, the professional must identify the precise regulatory or policy requirement that is not being met. Communication with the customer should be clear, transparent, and focused on rectifying the identified gap. If the situation remains unresolved or presents an unusual risk, a structured escalation process, supported by documented efforts, should be initiated. Question 15. Analysis of how an IndusInd Bank relationship manager should proceed when a client expresses interest in a new, high-return investment product that appears to carry a significantly higher risk profile than the client's previously stated conservative investment strategy. Option A. Recommend the product only after conducting a detailed assessment of the client's current financial situation, risk tolerance, and investment objectives to ensure suitability, and clearly explaining the associated risks and potential returns. Option B. Proceed with recommending the product immediately, given the client's expressed interest in the product's high return potential, assuming the client understands the inherent risks. Option C. Focus on the potential upside of the product and highlight its features, downplaying the associated risks to encourage the client to invest. Option D. Suggest a smaller initial investment in the high-return product to gauge the client's comfort level, without a full reassessment of their overall risk profile. The correct answer is A. Recommend the product only after conducting a detailed assessment of the client's current financial situation, risk tolerance, and investment objectives to ensure suitability, and clearly explaining the associated risks and potential returns. Explanation. This scenario presents a professional challenge because it requires an IndusInd Bank employee to navigate a situation where a client's investment objectives may be misaligned with their risk tolerance, potentially leading to unsuitable product recommendations. The core of the challenge lies in ensuring that any advice or product offered by IndusInd Bank is not only compliant with regulatory requirements, but also genuinely serves the client's best interests, thereby upholding the bank's fiduciary duty and reputation. Careful judgment is required to balance commercial objectives with client protection. The correct approach involves a thorough assessment of the client's financial situation, investment goals, and risk appetite before recommending any product. This aligns with the principles of Know Your Customer (KIC) and suitability, which are fundamental to financial advisory services under Indian banking regulations. Specifically, the Reserve Bank of India (RBI) guidelines and SEBI regulations mandate that financial institutions must ensure that products recommended are suitable for the client's profile. This approach prioritizes client welfare, minimizes the risk of mis-selling, and ensures compliance with regulatory mandates designed to protect investors. An incorrect approach that focuses solely on the potential profitability of a high-commission product for IndusInd Bank, without adequately considering the client's risk tolerance, represents a significant regulatory and ethical failure. This could lead to a breach of suitability norms, potentially resulting in client losses and regulatory penalties for the bank. Another incorrect approach that involves pushing a product based on a superficial understanding of the client's needs, without a detailed assessment, also fails to meet regulatory standards. This demonstrates a lack of due diligence and a disregard for the client's financial well-being, which is a direct violation of ethical conduct expected from financial advisors. Finally, an approach that prioritizes meeting internal sales targets over client suitability would be a severe ethical lapse and a contravention of regulatory expectations for responsible banking practices. Professionals at IndusInd Bank should adopt a decision-making framework that begins with a comprehensive client profiling exercise. This involves gathering detailed information about the client's financial situation, investment horizon, liquidity needs, and risk tolerance. Following this, a thorough analysis of available products should be conducted to identify those that best match the client's profile. Any recommendation must be clearly explained to the client, highlighting the associated risks and benefits. Continuous monitoring of the client's portfolio and periodic reassessment of their profile are also crucial components of responsible financial advisory. This structured approach ensures that client interests are paramount and regulatory compliance is maintained. Question 16. The efficiency study reveals that streamlining customer data access across various internal departments at IndusInd Bank could significantly reduce processing times for loan applications. However, the study does not explicitly detail how this data sharing will align with the Reserve Bank of India's (RBI) guidelines on data privacy and customer consent. Which of the following approaches should IndusInd Bank adopt to ensure compliance and responsible implementation? Option A. Conduct a detailed impact assessment, cross-referencing the proposed data sharing protocols with all relevant RBI regulations and guidelines, and obtain explicit customer consent where required before proceeding with any implementation. Option B. Proceed with the data sharing, but only after obtaining verbal assurances from departmental heads that the process is compliant with general data protection principles. Option C. Implement the changes and address any potential regulatory concerns that may arise retrospectively, focusing on the immediate benefits of increased operational efficiency. Option D. Immediately implement the proposed data sharing mechanisms to realize the efficiency gains, assuming internal data access is implicitly permitted. The correct answer is D. Immediately implement the proposed data sharing mechanisms to realize the efficiency gains, assuming internal data access is implicitly permitted. Explanation. This scenario presents a professional challenge for an employee at IndusInd Bank due to the potential conflict between operational efficiency and regulatory compliance. The core of the challenge lies in balancing the bank's need to streamline processes with its absolute obligation to adhere to the Reserve Bank of India (RBI) guidelines, specifically concerning data privacy and customer consent. A hasty implementation of the efficiency study's recommendations without thorough regulatory vetting could expose IndusInd Bank to significant penalties, reputational damage, and loss of customer trust. The correct approach involves a comprehensive impact assessment that prioritizes regulatory compliance. This means meticulously reviewing each proposed efficiency measure against the prevailing RBI regulations, including but not limited to the Digital Personal Data Protection Act, 2023, and any specific circulars or master directions issued by the RBI concerning data handling, customer onboarding, and transaction processing. This approach ensures that any changes are not only operationally beneficial, but also legally sound and ethically responsible, safeguarding customer data and maintaining the bank's integrity. An incorrect approach would be to proceed with implementing the efficiency recommendations without a thorough regulatory review. This could manifest in several ways. One failure would be to prioritize speed of implementation over compliance, assuming that the efficiency gains outweigh potential regulatory risks. This ignores the RBI's stringent stance on data protection and customer rights, which can lead to severe penalties. Another failure would be to implement changes based on a superficial understanding of the regulations, without consulting legal and compliance departments. This demonstrates a lack of due diligence and a disregard for the complexities of financial sector regulations. A third failure would be to proceed with data sharing or processing mechanisms that do not explicitly obtain or adequately document customer consent, thereby violating principles of informed consent and data privacy mandated by the RBI. Professionals at IndusInd Bank should adopt a decision-making framework that embeds regulatory scrutiny at every stage of process improvement. This involves proactive engagement with the compliance and legal teams, conducting thorough risk assessments that include regulatory impact, seeking explicit approvals for any changes that touch upon data handling or customer interaction, and maintaining detailed documentation of all compliance checks and decisions. The guiding principle should always be that operational efficiency must never come at the expense of regulatory adherence and customer trust. Question 17. Strategic planning requires IndusInd Bank employees to balance aggressive business growth targets with stringent regulatory adherence. An employee identifies a potential discrepancy in a large customer transaction that, if pursued without further investigation, could violate Know Your Customer (KIC) norms stipulated by the Reserve Bank of India (RBI). The employee is under pressure to close the transaction quickly to meet their quarterly sales quota. Which of the following approaches best reflects professional and regulatory best practice for this situation? Option A. Attempt to subtly alter the transaction details to circumvent the identified discrepancy without formal reporting. Option B. Proceed with the transaction as planned, assuming the discrepancy is minor and can be rectified post-closure to meet the sales quota. Option C. Immediately escalate the discrepancy to the bank's compliance department for review and guidance before proceeding with the transaction. Option D. Ignore the discrepancy, believing that the sales target takes precedence over minor procedural issues in the short term. The correct answer is C. Immediately escalate the discrepancy to the bank's compliance department for review and guidance before proceeding with the transaction. Explanation. This scenario presents a professional challenge for an employee at IndusInd Bank due to the inherent conflict between business objectives and regulatory compliance. The pressure to achieve targets can lead to overlooking or downplaying potential risks, which is a critical failure in the highly regulated banking sector. Careful judgment is required to balance profitability with adherence to the Reserve Bank of India's (RBI) guidelines and the bank's internal policies. The correct approach involves proactively identifying and escalating potential compliance issues to the relevant internal departments, such as the compliance or risk management team, even if it means delaying a transaction or potentially impacting short-term revenue. This aligns with the RBI's emphasis on robust internal controls and a strong compliance culture, as mandated by various circulars and master directions concerning risk management and customer protection. Ethically, it upholds the principle of acting in the best interest of the bank and its customers by preventing potential regulatory breaches, fines, and reputational damage. An incorrect approach of proceeding with the transaction without proper due diligence, despite identifying potential red flags, would constitute a serious regulatory failure. This directly contravenes RBI guidelines that mandate thorough, Know Your Customer (KIC) procedures and anti-money laundering AML checks. Such an action could expose IndusInd Bank to significant penalties, including monetary fines and reputational damage, and could also lead to individual disciplinary action against the employee. Another incorrect approach of attempting to bypass or obscure the compliance issue to meet targets would be a clear ethical and regulatory breach. This demonstrates a lack of integrity and a disregard for the established governance framework. It undermines the trust placed in employees by the bank and the regulatory authorities. A further incorrect approach of assuming the issue is minor and can be resolved later without immediate escalation also fails to meet professional standards. Regulatory noncompliance, even if perceived as minor, can have cascading effects and may indicate systemic weaknesses. Prompt reporting and resolution are crucial to maintaining a compliant operational environment. The professional decision-making process for similar situations should involve a clear understanding of the regulatory landscape, including RBI directives and IndusInd Bank's internal policies. When faced with a potential conflict, employees should prioritize adherence to these frameworks. The process should include 1. Identifying potential risks and compliance concerns. 2. Consulting relevant internal policies and regulatory guidelines. 3. Escalating the issue to the appropriate internal authority, e.g., compliance risk management, for guidance and resolution. 4. Documenting all actions and communications. 5. Never proceeding with a transaction if there is a significant doubt about its compliance status without explicit clearance from the relevant authority. Question 18. Research into potential conflicts of interest at IndusInd Bank. An employee identifies a scenario where a recommended investment product, while generally suitable, also offers a personal incentive for the employee. The employee is aware that this incentive is not disclosed to the client. Which approach best aligns with regulatory requirements and ethical conduct for an IndusInd Bank employee in this situation? Option A. Proactively disclose the potential conflict of interest and the personal incentive to the client and the IndusInd Bank Compliance Department before proceeding with any recommendation. Option B. Ignore the personal incentive and focus solely on the product's general suitability, believing that the client's best interest is served by the product itself. Option C. Delay disclosure of the personal incentive until after the client has made a decision to avoid potentially influencing their choice. Option D. Proceed with the recommendation as the product is generally suitable for the client, assuming the personal incentive is a minor factor and unlikely to influence the client's decision. Correct answer is A. Proactively disclose the potential conflict of interest and the personal incentive to the client and the IndusInd Bank Compliance Department before proceeding with any recommendation. Explanation. This scenario presents a professional challenge for an employee at IndusInd Bank due to the inherent conflict between client interests and potential personal gain, necessitating a robust understanding of regulatory compliance and ethical conduct. The core of the challenge lies in navigating situations where a client's financial well-being could be inadvertently compromised by an employee's actions or recommendations, even if unintentional. Careful judgment is required to ensure that all decisions prioritize the client's best interests above all else, adhering strictly to the principles of fiduciary duty and fair dealing, as mandated by Indian banking regulations. The correct approach involves a proactive and transparent disclosure of any potential conflicts of interest to both the client and the relevant internal compliance department at IndusInd Bank. This aligns with the principles of Know Your Customer (KIC) and Client Due Diligence (CDD), as emphasized by the Reserve Bank of India (RBI) guidelines. By disclosing, the employee upholds the ethical obligation to act in the client's best interest and avoids any perception of impropriety or insider dealing. This transparency allows for informed decision-making by the client and ensures that IndusInd Bank maintains its reputation for integrity and trustworthiness. An incorrect approach that involves proceeding with the recommendation without disclosure fails to uphold the fiduciary duty owed to the client. This could lead to regulatory breaches under the Banking Regulation Act, 1949, and RBI circulars concerning customer protection and fair practices. Such an action could be construed as a conflict of interest, potentially resulting in reputational damage to IndusInd Bank and severe penalties for the employee, including disciplinary action and potential disqualification from the financial services industry. Another incorrect approach, which is to ignore the potential conflict and hope it goes unnoticed, is equally detrimental. This demonstrates a lack of professional integrity and a disregard for regulatory requirements. It creates an environment where unethical practices can flourish, undermining the trust placed in IndusInd Bank by its customers and the regulatory authorities. A professional decision-making process for similar situations should involve a clear framework. First, identify any potential conflict of interest. Second, consult the internal compliance policies and procedures of IndusInd Bank. Third, if a conflict is identified, immediately disclose it to the client and the compliance department. Fourth, Seek guidance from supervisors or the compliance team on the appropriate course of action that safeguards client interests and adheres to all applicable regulations. This systematic approach ensures that ethical considerations and regulatory compliance are at the forefront of all professional interactions. Question 19. The monitoring system demonstrates a pattern of unusual transaction activity for a specific IndusInd bank customer that, while not immediately identifiable as fraudulent, raises concerns about potential noncompliance with Know Your Customer (KIC) norms. The operational team is under pressure to clear a backlog of customer service requests, and resolving this anomaly quickly is seen as a way to improve efficiency. What is the most appropriate immediate course of action for the employee who identified this pattern? Option A. Proceed with resolving the operational backlog, assuming the transaction pattern is a minor system anomaly and not a significant issue. Option B. Contact the customer directly to inquire about the nature of these unusual transactions to gain clarity. Option C. Immediately escalate the observed transaction pattern to the IndusInd Bank's Compliance and Risk Management Department for investigation. Option D. Attempt to manually adjust or correct the transaction data to align with expected norms without reporting it. The correct answer is C. Immediately escalate the observed transaction pattern to the IndusInd Bank's Compliance and Risk Management Department for investigation. Explanation. Scenario analysis. This scenario presents a professional challenge for an employee at IndusInd Bank due to the inherent conflict between identifying a potential regulatory breach and the immediate pressure to resolve an operational issue. The challenge lies in balancing the urgency of the operational problem with the imperative to adhere to regulatory compliance and reporting protocols. A hasty resolution without proper investigation could lead to significant regulatory penalties, reputational damage, and loss of customer trust for IndusInd Bank. Careful judgment is required to ensure that operational efficiency does not compromise regulatory integrity. Correct approach analysis. The correct approach involves immediately escalating the identified anomaly to the designated Compliance or Risk Management Department within IndusInd Bank. This is the most professionally sound and ethically responsible action because it ensures that the potential regulatory breach is handled by the appropriate specialists who are equipped to investigate, assess the severity, and take corrective actions in line with the Reserve Bank of India (RBI) guidelines and relevant banking regulations. This approach upholds the principle of innocent until proven guilty for the customer while prioritizing the bank's adherence to its regulatory obligations. It aligns with the spirit of regulatory oversight, which mandates proactive identification and reporting of suspicious activities or potential noncompliance. Incorrect approaches analysis. An approach that involves directly contacting the customer to clarify the transaction without prior consultation with the compliance department is ethically flawed and potentially regulatory noncompliant. This bypasses the established internal control mechanisms and could inadvertently tip off a party involved in illicit activity, hindering any subsequent investigation. It also exposes the bank to risks if the customer is indeed involved in fraudulent or noncompliant behavior. Another incorrect approach is to ignore the anomaly, assuming it is a minor operational glitch, and proceed with resolving the immediate operational issue. This demonstrates a severe lapse in professional diligence and a disregard for regulatory requirements. Such inaction can lead to the perpetuation of noncompliant activities, resulting in substantial penalties for IndusInd Bank and a failure to meet its obligations under banking laws. Finally, attempting to fix the transaction without proper documentation or escalation to compliance is also professionally unacceptable. This can be construed as an attempt to conceal a potential regulatory issue, which is a serious ethical and legal breach. It undermines the integrity of the bank's internal controls and reporting systems, which are crucial for maintaining regulatory compliance. Professional reasoning. Professionals at IndusInd Bank should adopt a framework that prioritizes regulatory adherence and ethical conduct. When faced with a situation that suggests a potential regulatory breach, the immediate step should always be to follow internal escalation procedures. This involves documenting the observation and reporting it to the relevant compliance, risk, or legal department. This ensures that the matter is investigated by trained personnel who understand the legal and regulatory implications. The decision-making process should be guided by the principle of when in doubt, escalate, rather than attempting to self-diagnose or resolve complex regulatory issues. This proactive and transparent approach safeguards both the individual employee and IndusInd Bank from potential repercussions. Question 20. Comparative studies suggest that employees in financial institutions often encounter situations involving non-public, price-sensitive information. If an IndusInd Bank relationship manager, while discussing a potential investment strategy with a client, inadvertently learns of a significant, unannounced merger involving a publicly listed company that the client is considering investing in, what is the most appropriate and legally compliant course of action for the relationship manager? Option A. Immediately cease the discussion about the target company and report the information through IndusInd Bank's designated internal compliance channels. Option B. Discuss the merger information with a senior colleague in another department at IndusInd Bank to gauge their opinion on the potential impact. Option C. Advise the client to immediately purchase shares of the target company before the merger news becomes public. Option D. Continue with the client's original investment plan without mentioning the merger information to avoid causing undue alarm. The correct answer is A. Immediately cease the discussion about the target company and report the information through IndusInd Bank's designated internal compliance channels. Explanation. This scenario presents a professional challenge for an IndusInd Bank employee due to the inherent conflict between client interests and potential personal gain, amplified by the sensitive nature of insider information. Navigating this requires strict adherence to regulatory frameworks designed to maintain market integrity and protect investors. The core of the challenge lies in recognizing and acting upon the ethical and legal implications of possessing non-public information that could significantly impact an investment decision. The correct approach involves immediately reporting the information through the designated internal channels at IndusInd Bank. This aligns with the principles of corporate governance and regulatory compliance, mandated by Indian financial sector laws, specifically the Securities and Exchange Board of India (SEBI) regulations, such as the SEBI Prohibition of Insider Trading Regulations 2015, impose a duty on individuals connected with a company to report any unpublished price-sensitive information, UPSI, that they possess. By reporting, the employee fulfills their legal obligation to prevent potential market abuse and demonstrates ethical conduct by prioritizing the integrity of the financial markets and the bank's reputation over personal advantage. An incorrect approach would be to act on the information by advising the client to buy shares of the target company. This directly violates SEBI regulations prohibiting insider trading. Possessing UPSI and trading on it, or facilitating such trades for others, constitutes a serious offense with severe penalties. Ethically, it is a breach of trust and fairness, as it provides an unfair advantage over other market participants. Another incorrect approach would be to ignore the information and proceed with the client's investment as originally planned, without any disclosure. This failure to act is also problematic. While not directly trading on the information, the employee has a responsibility to manage client portfolios prudently and ethically. Withholding material information that could impact a client's investment strategy, especially when it's price-sensitive, can be construed as a dereliction of duty and potentially lead to client losses, which could have reputational and legal repercussions for both the employee and IndusInd Bank. A third incorrect approach would be to discuss the information with a colleague at IndusInd Bank who is not directly involved in the client's portfolio management. This could inadvertently lead to the information spreading within the bank, increasing the risk of it being misused or becoming public prematurely, thereby creating a compliance breach and potential market disruption. The focus should always be on reporting through official, secure channels designed for handling such sensitive information. The professional decision-making process in such situations should involve a clear understanding of the bank's internal policies on information handling and insider trading, coupled with a thorough knowledge of SEBI regulations. When faced with potentially price-sensitive, non-public information, the immediate steps should be: 1. Recognize the nature of the information. Is it UPSI? 2. Understand the potential impact on the market and clients. 3. Immediately report the information through the designated internal compliance or legal department at IndusInd Bank. 4. Avoid any discussion or action related to the information until cleared by compliance. This systematic approach ensures compliance, protects the client, and upholds the integrity of the financial markets.